Welcome back to Investing Talk Podcast.
Great to be here.
Today, we're looking closely at Schlumberger, SLB. We've got a stack of information you sent over: news, a due diligence report, stock analysis.
Quite a bit, yeah. Acquisition news, earnings updates, dividends, analyst views, performance financials, strategy, competition, the works.
Right. So our job today is to sift through all this and figure out what's really key for understanding Schlumberger right now.
Let's get into it. There's certainly a lot to unpack.
Okay, let's start with something pretty significant, that planned acquisition of ChampionX. Where does that stand?
Well, the timeline they're looking at is closing in Q2 or maybe early Q3 2025.
So next year still.
Correct. But it's not exactly smooth sailing. The UK Competition Authority, the CMA, they didn't give it an unconditional thumbs up in phase one.
Okay. So a bit of a hurdle there.
Seems like it. Schlumberger is, working with the CMA now to sort out those concerns.
And the thinking behind the deal itself.
Fundamentally, it looks like they want to bolster their portfolio, enhance what they offer customers, and drive more value that way.
Makes sense. All right, let's shift to the financials, specifically upcoming news. There's an earnings call soon, right?
That's right, April 25th. For their first quarter 2025 results.
And what are the analysts expecting? What's the street thinking?
The consensus for adjusted EPS, that's earnings per share for Q1, is sitting at 74 cents.
74 cents. How does that compare?
It's actually a tiny bit lower than the same quarter last year, which was $0.75.
Interesting. And looking out further, for the full year.
For the full year 2025, the projection is $3.35 adjusted EPS. That's also down slightly from $3.41 in 2024.
Okay, so a near-term dip is anticipated.
But they do expect a rebound. The forecast for 2026 goes back up to $3.50 per share.
Right, a dip then recovery pattern potentially. Now, something investors probably liked seeing a dividend increase.
Yes, they boosted the quarterly cash dividend by 3.6% up to 0.285 cents per share.
When was that payable?
That was set for April 3rd, 2025. It generally signals, confidence from the company and a focus on returning cash to shareholders.
Always good to see. Okay, so how is the market viewing Schlumberger overall? Stock performance, analyst sentiment.
Well, the average analyst target price is interesting. It's $50.08.
And where was the stock trading when this analysis was done?
Around $35.11. So that target suggests a potential upside of, well, over 42%. Pretty significant.
Wow. Okay, so analysts are generally bullish then.
Seems that way, yes. Generally optimistic about the future. And performance-wise, year-to-date, the stock was up about 6.7%.
Which is better than the broader market.
Yes, it was outperforming major index funds at that point.
What's driving that outperformance, do we think?
Part of it seems to be strong fundamentals within the company itself, but also rising demand from certain sectors like data centers, surprisingly.
Data centers, interesting angle. Okay, let's zoom out a bit to the company's overall financial health. How did their last quarter look? Q4 2024.
Q4 revenue came in at $9.28 billion. That was up 1% from Q3 and up 3% compared to the year before.
And earnings. Did they meet expectations?
They actually beat them. Q4 EPS was $0.92, which was 0.92 day higher than analysts were predicting.
Okay, solid beat. And trailing earnings.
Trailing EPS is $3.11, and looking forward, it's expected to grow to $3.58 this year, based on those projections we mentioned.
How about valuation metrics like the PE ratio?
The price-to-earnings ratio was sitting around 11.28, which, compared to some others in the sector, is relatively low.
Suggesting potential value.
Potentially, yes. And another strong point is their return on equity, or ROE. It's around 20.95%.
Explain ROE quickly for us.
Sure. It basically measures how effectively the company is using shareholder investments to generate profit. So almost 21 cents profit for every dollar of equity is quite efficient.
Got it. So financially, things look reasonably sound. How about their strategic position in the wider energy industry?
Well, they're the world leader, top provider of tech and services across the board, digital, reservoir performance, construction, production systems. They cover it all.
And are they adapting to the big shifts happening in energy, like decarbonization?
Definitely seems to be a focus. They're positioned to benefit from that push towards decarbonization and also digital integration. That's a key theme.
You mentioned digital integration. Any specific examples?
The due diligence report actually mentioned investment in specific AI-driven drilling technology. So it's not just talk. They're making concrete moves. And they're also actively working on carbon management initiatives.
Okay, so leaning into those future trends, who are they up against? main competitors?
The big ones are Halliburton, Baker Hughes, and Weatherford International.
And how does Schlumberger stack up valuation-wise against them, say, on forward PE?
Based on the forward PE, Schlumberger might look a bit undervalued compared to some peers.
What are seen as their core strengths against these competitors?
Market leadership is huge, obviously. Also, the sheer breadth of their services and their ongoing technological innovation, they invest a lot in R&D.
Right. So pulling this all together, what are the main risks and opportunities that jump out from all this info?
Well, the delay with the ChampionX deal definitely flags regulatory risk. That's clear. And the potential slight dip in near-term EPS we talked about, that could signal some margin pressure or maybe just broader economic headwinds affecting the industry.
Okay, those are risks, opportunities.
Big ones seem to be in expanding those digital solutions further and really leaning into supporting decarbonization efforts. That's a growth area.
And the usual suspect for this industry.
Oh, absolutely. Volatility in oil prices. That's always a factor, an ongoing risk.
So considering everything we've discussed, what are the main takeaways for someone looking at Schlumberger right now?
I think what stands out is their very strong market position. Analysts are broadly positive, as we saw with that significant potential upside, and they're clearly trying to adapt to where the energy sector is heading.
And the dividend adds to the appeal.
The dividend increase certainly helps the case for investors, adds another layer. But you absolutely have to keep an eye on that ChampionX regulatory situation.
Right, that's a key variable.
And the near-term earnings picture, that slight dip, those need watching. But that 42% potential upside analysts see isn't just pulled out of thin air. It likely reflects belief in those digital moves, the carbon management angle, and maybe eventual synergies from ChampionX if it clears.
It does seem like the market is recognizing those strategic shifts, aligning with industry trends. So for our listeners, this picture suggests a company with, well, a strong traditional base, but also a clear focus on the future of energy.
Exactly. Which leads to a couple of key questions for listeners to think about, doesn't it? Firstly, if that ChampionX deal does go through, how exactly will it strengthen Schlumberger's competitive position? What new advantages might it bring?
Good question. And the other?
The other is about that upcoming earnings report on April 25th. What will that tell us? Will it confirm the slight near-term pressure? And more importantly, what guidance will they give for the rest of the year and beyond? That could offer a lot more clarity.
Definitely points to watch. Thanks for sharing all these sources with us. Hopefully this analysis has given everyone a clearer view of Schlumberger.
Hope it was helpful.
Remember to subscribe, like, and comment on this analysis. We look forward to exploring more of your sources next time on Investing Talk Podcast.